Let's discuss the loans of the businesses in the first instance. Paul, let's start with African Bank.
Yes, so you put the numbers out there earlier. African Bank has about a 50, maybe it's 55 billion rand outstanding book now. We know the trend since '06. They have been extending longer loans over longer periods to good quality customers, but they remain experimental. So both of the unsecured lenders do this. They give small loans to new customers that look okay in terms of their 3-month bank statements, and then they see how it goes, because in this game roughly a third or thereabouts of loan advances at some point will have some kind of problem in terms of paying, but ultimately only about 10% of loans get written off in their entirety. So that's the nature of the book. They price the loans according to the risk that they assume. So new customers, short loans, high interest rates, and then they see how it goes. I don't think there's a massive bubble in this space, because I think the demand for it is enormous. And as Capitec pointed out in their recent annual financial statements, the fact that homes in townships and homes in urban areas that are sort of informal can't qualify for security in terms of mortgages and all of that is well known. Rural areas, communal properties can't qualify
I'm still not getting
either.
any indication of what differs between Able and Capitec in this space. Levan, maybe you can help me out.
I think the difference is Capitec has got a variety of product offering. So whereas Able may be a specific micro lender, and on the other hand, Capitec has got a bit more sophisticated products. You've got credit card facilities, you've got a variety of different banking products and saving instruments. Whilst both are micro lenders, I think the significance is in the products.
And from a product perspective, what
yes, look, we're going to talk about the other products also as this conversation goes on, but I think Capitec is better understood as a sort of new kid on the block, taking on all of the other banks by virtue of their going after the business where people actually deposit their salaries here. Capitec has also put a lot more effort into branches because they want to be represented all over the show. They've got like 8,000 employees now and 600 or something like that branches. They've been putting, in downtown Joburg, for example, I think Able has got 1 or 2 branches, whereas Capitec has got, sort of 27 or something. So Capitec has great ambitions. They think they can go and eat Standard Bank and Absa at their, sort of core retail business. And
who's leading the charge, Paul? Who's leading the charge in the loan environment?
Well, pursuant to what I was yammering on about there,
I was wondering whether you were ever going to get to a point.
Notwithstanding all of those new footprints, Capitec makes most of its money still from loans. And that's because loans are a very, very profitable area of business. And it's because you write up the interest portion and you add it to the outstanding balance every month. So extending loans at high...
Any bank has got to say that loans are at the heart of their business.
It's making money from money. It's the most, it's fabulous line of business since
really
powerful.
The bottom line when it comes to banking, doesn't
money
it?
lending.
Money lending, exactly. Levan, can you give us a little more color in this space?
I think you said it very eloquently. It's not rocket science, and it's actually the simplicity of their model that makes them profitable for the last decade or so. Their costs are well contained. If you compare them to the giants, the big 4 banks have got massive costs per capita, and Capitec and the likes of Able have been very streamlined. Yes, it's high interest rates. Their staff bill is lean. They have a very important geographical footprint in South Africa, and therein also lies their strength. That gives them a very nice cross risk. If a particular area is seized by drops in, let's say, closures of factories, or as you saw, strike action earlier or mid last year, that destroyed a particular geographical region, but they were able to overcome that. $1 billion or so hit because of Marikana didn't hurt their Cape Town or Johannesburg business, for example.
So who's edging ahead here?
Look, I think both of them are excellent in this space. Both of them have very good centralized computer-based scoring systems for deciding who should get loans. Both of them, do this whole centralized thing where they check and they get many more applications than they actually grant. Both of them, however, have a problem, and that is that the big 4 banks have been growing very big in this space. So they've previously had this to themselves, but now, unfortunately, all of those others have been getting stuck in here. And remember, the other four
And
banks.
saying actually this is where the growth is going to come from in the
And why
South
are they
African
doing
space.
it? They're doing it because if you think about it, with all this Basel nonsense, unfortunately,
Apologies
the big banks,
to those,
the big banks have been faced with, needing to provide more against all of their outstanding loans, and so it's gotten less profitable to do auto, car, and all that other stuff. So those banks have been very happy to write big
and
advances
I
in
cannot
this
get a
space
straight
too.
answer out of either of you in this show. So when it comes to loan, I'm going to ask just one more time. Who is
Yes, no-
are they both neck and neck?
No,
That
they're both
seems-
neck and neck, and both of them, unfortunately, have been experiencing a bit of a deterioration in quality because the pickings have been slim and the yields have been coming down, and that's why we
So
saw
there's no leader.
African Bank last week taking this, big unforeseen write-down in their book and the share price collapsing because people either saw or didn't see this kind of slight deterioration in the business coming.
I don't know what to say. You haven't answered my
No,
question.
both of them, I think, are head and head in this space, but both of them are under pressure in this environment.
All right.
I think that they're very similar businesses. While they work and operate in a similar space, their businesses have unique qualities. And so
I'm
Capitec's
leaving
good.
it. I can't get an answer out of these guys.